Hello and welcome to June 18th. I apologize, we're recording on the 19th, and happy Juneteenth for all the country. This is a moment of everybody, not just one group. Yes, we are celebrating our African American Americans, but we're also celebrating us, the people. So there is my honor for that, for this event. So moving on to trading, not good. KR is at minus 17, and KR did get triggered. We set up that trade yesterday, not yesterday, on Thursday, and then I discovered why the scanner did not pick up the KR, and I'll explain that in when we get to the scanner section. So here we are with KR, and KR is running at 17% right there. We got triggered, and we got triggered with a little bit of a bad fill, over 30 cents over our expectation, but we're in the trade, and uh, and if we're able to hold our ground against the uh, 3610, then and get into the zone here. Remember, once we get a clear candle, rule number one of the exits, once price has cleared the entry point, including the wick, you go to EP stop. Now, where is that coming from? That's coming from having tight stops, which is from that book known as uh, Unknown Market Wizard by Jack Swigert, and a lot of traders, all the traders, are very much risk management, tight stops, tight stops, tight stops, and the mantra is if the trade doesn't take off right away, get out. I forgot which one I just listened to, but he has a 5 day rule, and that's going on. He has a 5 day rule that we entered here. We got triggered here on this day here on Thursday. I think we did this up to Wednesday night, right? We got triggered on Thursday. Let me go check. So you go right click, come down view trades, click there. We got triggered on the 18th. So we did get triggered here on this long candle, and then the result is oh no, we got triggered here. We got triggered on the 18th, right? The 18th. So the 18th, right? Because this is Friday. This Friday's results. The bottom line is this: we this trade is not over yet until we get stopped out here at 36.10, or we get the opportunity to move the stop to 39.15. And it's KR. And now we'll on to Capri, and Capri is fallen down to 25%, and it's running now here. This is most interesting. I did expect us to get stopped out here. We're at 15,190 on that first ratio, the first lot, lose one and stay in for three. And the low came out to 52.02, and we're 51.09. We're 12 cents from being stopped out. Chances of getting stopped out on Monday, very high. Why? Because we have the wick on the top side is selling pressure. We have a down candle. Also, the stochastics is dipping, as well as the RSI, and we got into red territory on the MACD histogram. So all those are, and we have a downtrending EMA. Excuse me. So the bottom line is that we're going to be expecting getting knocked out. So at 25% is that close right there. So again, we might get knocked out somewhere between 26 to 27%. Our estimation was at 30. So again, we're staying with our ballpark of controlling the percentage risk, the risk management. And the thing is to keep, even if you're gonna have losers, but if the losers stay small, when we have the big wins that we've seen in the past, we're gonna hit that ball right out of the park, and we're gonna be able to pick up all those losses and then some. As you guys, a year, we are almost, come September 6th, this channel will be 2 years old, and there's lots and lots of examples of losers and tremendous a lot of examples of winners. So It happens. It's part of it's the cost of doing business. With that said, let's go on to the scanner. Now we were having some problems Friday too, because the scanners were not working. Something was wrong with the network. There is a site that's called, let me see right here. This is a site that's called uh, Down Detect Down Detector. Down Detector is a website, and you can type in a website to see if the website's having any kind of problems. And sure enough, Thinkorswim had virtually all the major companies across the country were having major problems. While we're here, let's go ahead and look at this. The SPY is at 13.1, and we're holding ground at 8.9. So we are behind the SPY, but you saw in the in the last few months we have been as much as three times ahead to SPY. Do I expect it to happen again? Absolutely. Remember, too, we did change the scanner. So let's go on to the scanner now. Now, the scanner found out what the problem with the scanner was. The scanner is that we have a value line. So let me go ahead and let me use price to be easier to work with. All right. So we have in the scanner, it says right there, the scanner says if the stochastics is below 40, show me opportunity. So the stochastic strategy is stochastics is uptrending and is below 40. Why? Because we want to have all that opportunity to go from 40 up into the 90s, and that means we have the opportunity of riding the price up and making the money. The the accepted traditional schools is that you actually enter above 40 and below 60, the sweet spot. That's the 20, the 40, 60. And I don't do that because I have found that by the time sometimes I get in above 40, the, I've already missed the opportunity of getting in at the bottom. And that's where you have the biggest opportunity in making the big money. And in addition, you want to keep the ratio as tight as possible, so that way if when it does take off, you have an opportunity of hitting that 3 to 1 right there. You want that 3 to 1. We're going to risk $1 to make three. So that's what happened. The scanner didn't see it, but my eye saw. This was on Capri, so let's go back to Capri because that's how Capri got triggered. So Capri got triggered for the to set up the trade because of this. We had the uptrend on the EMA, we had uptrend on stochastics, we had uptrend on RSI, and we had a red to green on the histogram. It all qualified. What happened was that the scanner didn't pick it up, and the scanner rightly so should not have picked it up, because of the fact was that we were not. Look here, we were at 66.96. You can see the value over here, and there it is, 66.96. The result is the scanner wouldn't have seen it because we weren't below our 40 line. I want to go back as deep as 40 to make that run to the higher numbers. So I set up the trade anyhow. Why? Because I did it in front of you. I did it live. And then this way, I wasn't going to rescind the trade because the trade triggered. And I said, you know what? Those things happen. But now we know why the scanner did not pick it up. That said, let's go ahead and run the down scanner for the alphas. And and now on the opposite side of the fence, the value here has to be above 60. The value has to be above 60 in the downtrend to report, and it didn't have anything. Now, I'm going to give you guys a treat. I'm going to go ahead and run the market. Yeah, let's go ahead and run the market. Hopefully, everything will work. And we had a major problem in Thinkorswim on Friday. But we got data, so now we're going to get it. And there it goes. And now let's see if we get anything to show off for the downtrend. And oh no, we're running out of time. Hurry up, hurry up, hurry up, hurry up. And oh, this is going to be a cliffhanger. Oh, nothing there. Okay, let's switch over now to our up. And we're using the Stochastic Up and alphas again. And let's see what is happening. Remember, Nothing there. Let's go to the market in the closing seconds. And there we are. Now, how many opportunities we have? We're looking at the 5,000. And there it is. And there it is. We have 23 that qualified. 23. I'm going to show it there for you. You can freeze the frame, look at it. Remember, this is not any trade recommendations. This is only for your education on how the scanner finds stuff. When you go from here, where do you go from here? Well, you go from here. Well, first of all, I'm going to sort this to volume. There it is. And then the next thing is going to happen is, of course, none of these are on my loss leaders list, so I'm not going to be trading any of these. But if you guys look at it, do your due diligence. It's not a recommendation. It's just a suggestion of possibilities. Why? Because you got to go and check the options to see if they qualify. Other thing too, while we're here, when do you trade? When are options better than? When is actually buying the stock better than options? Yes, right there. Anything under $5. So from this all the way up would be qualified in your penny stock trading, and you would buy the stock. Just as you do the same with the option. So, and you buy it in lots. So according to your budget, you buy 100 shares, 200 shares, or 300 shares. But the bottom line is that you don't have to worry about time decay. You got to worry about getting stopped out. You still got to adhere to all the rules. All the rules still got to be applied. So let's go ahead and go to go below star and see what it's going to show for us. I know this is, I haven't done a long video in a long time, so it's due. It's due. And there it is. There is global star. And look, I've already the scanner came up on it earlier this week. The scanner came up with it right there. It's a very small uptrend on the EMA, very gentle up on the STO, very gentle on the RSI, and green marks. We are already tracking this trade. This is forward testing. This is the other thing. This is forward testing. So how would you do forward testing? You would go through all these, mark them on the chart, and you have two choices. You can save it as a watch list. You can go here in Thinkorswim, and then right click. Where is it? Right there is a way. There is a way. I know I've done it before. There is a way that you can actually go ahead and it says create watch list, and you can grab this as a watch list and then come back and see back it again in the future. That's a way of doing it. Or take a screenshot. Take a screenshot or print it out and then come back and go to the charts. Mark up the charts. Like I said here, I did this earlier because this one came up. So I already marked it off here. Then I went, and I'm not going to do all of these, but my own list that came up in the past week. And then the bottom line is you go to the next situation, and that is you go to, uh, you put it away and come back in a week and see how you did. And did the scanner work for you? Did you come up with the right parameters to justify entering the trade? Did you put a proper stop point? The stop is based here. This is the swing low. The stop is based here on the swing low. Now, if this scanner was today, I would have to check to see what the swing low is here. Okay, the swing low is, the low here is 124, and the low here is 125 and 125. Guess what? That's a swing low. And what the low is here, 125. So you would actually end up setting this trade up with that swing low. I don't typically like that swing low being that tight because of the fact is that we do have a support just below it right here. And look at the strong candle that came down and stopped. This is a major support. So I did, and remember I told you I did this earlier the week. So there we are with that. And and uh, and that is it, really, the conclusion of today's lessons. So let's go ahead and call it a day for June 18th, celebrating it on doing it on Juneteenth. And be well and take care. Bye bye.